The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 4th, fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call giving, sharing, and generosity. You know, it's best to start the discipline of generosity when the amounts are small. It's easy to give 10 cents out of $1. It's a little harder to give 100,000 out of $1 million. Giving is also better than receiving because giving starts the receiving process. Something to think about. You see, nothing teaches character better than generosity. Now, if you don't have money to share, then share ideas with others. If you share a new idea with 10 people, they get to hear it once, you get to hear it 10 times. And if each of you told 10 people about TFNN, well, guess what? Soon we would overtake CNBC. Finally, folks, sharing makes you bigger than you are. The more you pour out, the more life will be able to pour into you. So as we begin Fantastic Friday and ready ourselves for an outstanding weekend, please share as much as you can. Give as much as you can give, because when somebody shares, everybody wins. Let's go see if this market's going to share anything with us. Right now, Dow futures are up 26 points, trading out at 14,932. S&P futures up about 4, trading at 1673.50. NASDAQ futures up nearly 7 points at 3209. Russell 2000 up about 3 points at 1069. King dollar up 24 ticks right now, trading out at 8008. The currency market here relatively stable. In the hard metals market, it's stable as well. Gold is off 30 cents right now. No big deal there. Silver totally flat. Light sweet crude up 59 cents at 103.90. Quick peek around the globe out here. Over in Asia last night, the Nikkei was down 132 points. The Hang Seng off 75, courtesy of the handoff that the U.S. gave to those markets. Over in Germany, DAX is up 3 points. Woohoo! FTSE is up 11. That's up about 0.2%. Our call-in number is 877-927-6648. If you give us a call, be happy to take a look at your stock chart. So it is, we're coming to the end of the week. So I thought what we would do today is look for some clues on the weekly charts just to put things into perspective. Now, obviously, today will end that week. So how the trading session today closes can have a significant impact on the weekly chart that we look at. But first, we'll start off by taking a look at our EKG, the 30-minute chart for the S&P futures. Now, if you're watching us on TigerTV, thanks so much for doing it. Of course, if you'd like to see these charts in HD, just go join the Tiger's Den. That's a beautiful thing. And if you're listening on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Of course, you can always catch us through the live stream. Just go to that smartphone device of yours, go to the homepage of TFNN.com, or maybe it's your pad. Over on the right-hand side, you'll see a button, 3 little smartphones on it. Click on that. The show will stream live to you. You'll be able to at least see the chart, see what we're looking at. And if you were looking at the screen, what you would see, two blue channel lines on the way down, a descending price channel that the ES Mini has been traveling within. We can see that that has been contained within that area pretty well. I'm going to erase the smaller little red lines on there. That was just something I was tinkering with here at the moment. Now, the low that we made yesterday, when we switch over, we'll take a look at the daily chart, is an important low. So also, and an important low where is the S&P futures going to find support? Is the S&P going to find support? Well, if it is going to find support, if that low, and we'll see when we go back and take a look at it here momentarily, if it is going to find support, what's going to have to happen is this descending price channel that price has been traveling within, it's going to have to bust out of here. So today, if the markets move higher, what's going to be key for us to watch on the intraday charts is this price channel, because you've got price that is in this descending level. If price continues to move lower, that's just normal. A real breakout would be a price break above this descending price channel, and most certainly a break above 1683. So what we want to do is we want to be paying attention to the trend, and we want to look at the shortest term time frame that makes sense for us to look at to determine whether or not this trend is going to continue or this trend is going to break. Now, you'll see as I switch over to the daily chart here, if you're continuing to follow us along, well, I've got the weekly chart. That was the Dow. Let's actually go over to the daily chart, and then we'll switch over to the weekly. But let's take a look at the daily chart. So what was it that Steve was talking about? Well, when I took a look, if we look at that intraday chart, that 30-minute chart, the importance of that low really was just correlating to the low that came in yesterday on the daily. That's at the bottom of its rising price channel. So on the intraday chart, we see that descending price channel very clearly identified out there, and you can see that's starting from the top from last Thursday out there, that high at 1726, and prices now moved down into a very significant area of support. Number one, it was a 0.618 retracement. That number, 1663.71. We actually saw a price move yesterday down to 1663.25 out there. So the 0.618 level has been hit. Now, look, this is not a bullish candle at all. What we are taking a look at is some diagonal support out here. And it's diagonal support that has been significant support because we're going all the way back to November of 2012, nearly a year's worth of support out here. So if this area cracks on the daily chart, whereas on the monthly, on that 30-minute chart we're watching with price moving down, that would not be a breakdown. Where the breakdown would come from is by paying attention to this weekly chart. And I think that is oh so important out here because the market is really up against a level where it should provide us with information. If, in fact, as we take a look at this daily chart where we see it's up against support, and if I go back here and we take a look at that 30-minute chart and we take a look at that descending price channel, we see just how important a break above the top of this blue line will be. So it's been very clear. I think it's very clearly laid out to us in order to be able to interpret the market. Because right now, the bears, without question, well, I shouldn't say without question. Let's just say the bears have control of the ball. But there's enough divergence out here as I take a look at these chart patterns for us to be able to have to say, something to think about. But the cool thing is, we probably will get all of our information with regard to what the market's next move is going to be from being and paying attention to this 30-minute chart out here. Very cool in order to be able, in my opinion, in order to be able to take a look at the daily chart, know that we're up against a support level, and if that support is going to hold and there's going to be a breakout, which would mean nothing more, folks, at this stage than a retracement to sell. Because the trend itself, the trend seems to be down, especially if we were to take a look at the Dow. Now, let me come back here to the daily chart. I'll get this stuff figured out here. So we have it laid out here with regard to what's going on inside the daily chart. Now, one other thing I'll point out here in the daily chart as we take a look at it, that pattern that you're looking at, that shaded blue pattern out there, that 1.618 butterfly, that A to B equals C to up, this move down here over the past week still keeps that pattern intact. So a price projection in that 1772-ish range is still in place. The only way for that pattern to go away is going to be a break of a swing point. That swing point would be the lows here from August the 28th. But first, we're going to have to see a break of that trend line, or that channel line. And not that it can't happen, but isn't it cool to be able to have a roadmap laid out where we're going to be able to identify exactly what the market's next move is likely to be out there. In fact, now let's switch over to the weekly chart. So let's take a look at a different time frame. Let's see what kind of perspective we can get as we take a look at the ES Mini on a weekly chart. And as we take a look at the high that was made out here, last week, the high that was made the week of September 20th, no, that's certainly not a bearish-looking candle out here. We had this little bear sash out here, though, that did occur the week of August 9th. So we would draw a line across the top of the high. That's going to be the August 2nd level. So as I draw, we'll use that as a red line. What we can see is that has held as an area of resistance. Now, that's an important number for us to be paying attention to. Last week, we got a little bearish engulfing candle. This week, we're having a bit of follow-through out here. It has not broken a swing point, though. So there's been no break of a swing point. And what we know, as we took a look at the daily chart, nothing more than your normal 0.618 retracement out here. Now, the trend line here on the channel lines, I should say, on the weekly chart, a little bit different than the daily chart that we were looking at. Of course, the daily chart was coming off of this low right here, this November 16th area. So if we get a break of the daily channel line, we can very clearly know where price is going to move to. Well, I won't say clearly, but we would have a great idea of where price is going to move to. It'll break down, and it'll break down all the way to the bottom of this channel line here. So that's why you can be patient with regard to which side of the trade it is that you take. As we take a look at the ES Mini here, it shows us that the market is up against resistance, but it also has not broken through any kind of support level. It has not broken any swing points to the downside here. But now we've got that intraday chart, the 30-minute chart that helps us understand if there's going to be a breakout to the upside. We have on the low end here, we know on the daily chart, if it breaks the rising price channel off of November 16th, then what we're likely looking at is a very deep correction, one that will probably take us back on the weekly chart to its lows, which is somewhere around the 1,550-ish type range out there. So that's on the S&P. If we switch over and take a look at let's take a look at the week link out here. Let's take a look at the Dow. Let's go see what we can find out about the Dow. The element that we're taking a look at here on the Dow chart for the weekly, which is absolutely the weak link out here, what it too has not done is broken a swing point. Really, all it's been doing here is traveling in a sideways consolidation range. We can look at what that looks like here. It is so clear. It is clear as bell out here, clear as day, or clear as something out here. But that's the sideways consolidation move that the Dow, the weak link, has been traveling in. So although it's weak out here, and even though it looks like we had a little shooting star on the weekly, which was up against this little bear sash candle out here, something to think about. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Nothing really changed here in the market. Dow futures up about 16 right now. S&P up a couple points. Let's go out to Philadelphia to our man Z in the Tiger's Den, or John. John, thanks for calling. Thanks for holding. How are you this morning?
Hey, good morning to you, Steve. I thought with the market virtually on a holiday today that might be worthwhile to step back. I wanted to ask if you could give fresh eyes and share with us what you see, what triggers come to your mind when looking at the Treasury yields, and I'm thinking maybe the place to start would be with the benchmark 10-year yield.
Yeah, and so that's what we have up on the screen here. I remember you had called into the show a while back. You were taking a look at this head and shoulder pattern that had formed out here. And on the 10-year, it broke above that on the week of June 21st out there. And when it broke above that area, it gave us really a price projection that it should move up to about the 3% area, maybe 3.12, something like that. Now, what I'm going to do here is I've got the weekly chart, but I'm going to first go over to the monthly chart because I think it's important to also take a look at the monthly chart. And as we take a look at the yields here on the monthly chart, it has a really well-defined price channel. And the price channel, what we use, folks, here is we use either an open or a close of the candle, and you're looking to connect at least 3 of those opens and closes. And as we take a look at it, we can also see that it was the month of August where that price channel had broken. Now that, looks to be a real breakout here. We won't know. Now, when any time something breaks above a price channel, the key is what happens when price tries to come back into it. And in this case here, what the monthly is saying, because we did have on the monthly, we did have a either a dark cloud cover to bearish engulfing candle for the month of September. And if we get a little bit of additional follow through this month, and we're early into it, which would be a close below the 2.84 level, it says that price should at least try to get back inside this price channel. Now, if it tests this area and holds, then that says that the price projection on the weekly chart would absolutely be back in play here, and all that we're looking at is just a retracement. And that's what I says. Now, on the to go ahead and put that with the weekly chart, the weekly also had a consolidation level, so you can see that price could easily fall back, try to test, and I suspect that simultaneously, John, what would happen is price would come back and confirm by trying to get back inside the lower part of the consolidation range. If it rejects that, we'll probably see the same rejection on the monthly chart as well. So it looks like right now that's what it's just simply trying to do. And if we take a look at retracement levels from the low to the high, it's really nothing more than coming back to the 0.382 level, around 2.46. So right in that range is what it looks like the market wants to do. And then it will tell us whether or not Treasury yields are going to go ahead and rise, because if it rejects this area, that probably sets up, quite frankly, a really large A to B equals CD up. That's what it does. If it's only a dead cat bounce, if it's only 0.382. But you study this even more so than most. What are you seeing out there?
Yeah, Steve, I'd be, let's put it this way, my operating premise is that, in fact, this decline off that 298 high there early September is, in fact, a corrective decline, meaning I'm assuming the larger trend is now up on this instrument.
Yeah.
So that'd be my view, and that's the way I'll be trading it. I do appreciate you sharing that monthly candlestick chart. I've never looked at it from that perspective, and that channel breakout.
Yes.
And now retest of that breakout is interesting and fascinating. So I appreciate
it's always good to be able to look at a level up and a level down or what have you. But it does look like the breakout at this stage, you'd have to say is real. When we take a look at the weekly, we put that together with the monthly. And now the real key is going to be as it comes back and it makes that test. And, if all it really does is come back and test the top of that consolidation level and only make the 0.382 retracement level, that says interest rates are going to get much, much higher.
Steve, that's a great perspective, that monthly. So once again, thanks for sharing that. I'd never seen that before. So terrific.
My pleasure.
I appreciate your help, sir.
My pleasure. Thanks so much for calling. We appreciate that. When we get back here, the markets are going to open, folks. Then we're going to go take a look at, I think what we'll do is we're going to take a look at some hammer candles that were formed 2 days ago. Lots of hammer candles in the marketplace. I didn't get a chance last night to go through them, but there's companies like Travelers, Ralph Lauren, ticker symbol MET, PEP. I'm going to take a look at a couple of those hammer candles, see if any of them were up against some support, and see how that is going to hold out there. Or you can give me a call at 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 20 points, trade out at 14,976. S&P off a point at 1677. The NASDAQ Composite is flat out here, up 64 cents. You've got the Russell 2000 down 67 cents. Apple down 87. Microsoft off 9. Google down $1.50. To the upside, Tesla Motors up $1.69. Not a lot of big mover here to the upside, or even to the downside. To the downside, you've got Lannett Inc. LCI is the ticker symbol. They're down about $2 and change. That's off. Well, it's off 10%. So percentage-wise, it's off a bit. Tenaris SATS is a ticker symbol, down about 3% or $1.30. Rent-A-Car Inc. or Rent-A-Center, Rent-A-CTR. I'm not sure what that is. RCII is a ticker symbol, though. They're down 3.5% off $1.33. Union Pacific, they are down about $1.13 out here to the upside. Open Table lead the charge now, up a big $1.52, up 2.5% out there. St. Jude Medical up about 88 cents, so relatively flat-ish market out here as we take a look at the open. So I mentioned that I wanted to go take a look at some different hammer candles that had formed in the marketplace a couple of days ago. So let me get a clean slate out here. Just want to see how some of these equities are behaving here this morning, how they actually behaved yesterday. So we'll start with, we're going to take, and these were hammer candles that showed up on the daily chart, and they are they're significant reversal candles for us to pay attention to. Now, the S&P 500, most of these coming from the S&P 500. The S&P 500 had made a hammer candle 2 days ago as well, and that failed. So that was a failure out here. So I've got Travelers up on my screen. Oh, I don't have it up on my screen. I said I would. Give me a second here. Thought I had Travelers, but I didn't. TRV is the ticker symbol, so that's what we're going to take a look at first. I just want to see what this was doing as it was making that hammer candle. I want to see what it was coming back into. So Travelers was coming back into a gap. So as we take a look at this chart, let me get rid of the moving averages out here. They're not really doing us any justice at the moment, so let me delete that. There we go. A little bit of a cleaner chart out here. Now, the reason I want to take a look at this is because the bottom relative strength indicator I'm looking at was in the extreme over sold territory out here. But as I take a look at yesterday's candle right now, that really defeats that purpose of that little dragonfly doji hammer type candle out here. But what it was doing, it is confirming an area of support. I want to see what it's done price-wise. Now, we can see this little gap out here, and gaps are certainly our friends. And this gapped up on September 16th with 2 million shares. The volume before that, the day before that, was 1.1 million shares. So we did have some wide price spread. We did have some accelerated volume. As that hammer candle was coming back, it was 2.4 million shares. So really, it held as support. Let me show you what the support line looks like. But it was coming back with too much volume out there. So it makes this hammer candle somewhat suspect. And yesterday's move down also makes it suspect as well. 2 million shares on the way back yesterday. But that should be, if you're inside Travelers, this should be an area of support out here. It's just not one that would look like a long trade to me out here. So we'll just go ahead and we'll cross that one off of our screen. The next ticker symbol I'm going to look at is KMB. I don't know what KMB is, but right now I'm just more interested in what these charts are actually doing, just so that we can see. So here's a hammer candle that actually looks successful as we take a look at yesterday's price action in a market that was moving down. So let me go switch over to another place. Let me see what KMB actually is. So letter KMB, just so I know who the heck we're talking about. Kimberly-Clark. Guess I could have almost figured that one out. So as we take a look at Kimberly-Clark, 2 days ago, you can see that hammer candle. And that's also like a dragonfly doji. And what was it doing? Looks like really just coming back into, let me take a quicker peek at this chart out here. Looks like just a normal retracement. Let's see what that retracement level was. Now, we can see this has clearly been inside a downtrend. So, in between a 0.618, 0.786. Let me see what's going on here with its relative strength, relative weakness level out there. Not a ton. So, no real pattern completion as that hammer candle was formed. But this is telling us Kimberly-Clark yesterday with its move higher, considering the move lower inside the market out here, not too bad, all things being considered. Now, what Kimberly-Clark would truly have to do, let's just see, see if we can identify a trend line out here in this, maybe probably more like that, so it would be really the trend. So as far as where Kimberly-Clark could bounce to, you'd have to say that if it could break above that trend line out there, and it's got this, which would be coming into the swing point, this is how you would want to play something like this. So you got September 19th, it's the swing point. If price can come into that level as well as break that trend line with more than 1.5 million shares, then a hammer candle means a lot out there. And now if the hammer candle fails out here, there's really no level of well, it's got a hammer candle right here. So produce another hammer candle back on September the 5th as we take a look at this chart. So the next level of support on this equity would be about $91.60. Let's go out to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. How are you this morning?
Check out my two normal ones, Intel and POM. POM is the one that pays 6%. POM.
Okay, POM. So
I got to get going, but I'm going to listen to you. Intel and POM.
Intel and POM. All right, we'll take a look at POM.
POM has a nice dividend, chunky dividend.
Yeah. Are you in this? Are you in this equity though?
No, I'm looking at it, but it just paid out as a dividend, so I'm wondering how much lower it can go. Fibonacci retracement from the lows to the highs is like at 1836, 50%. What do you do after a 50% retracement? Normally go farther down or more or less?
After, did you say 50%?
It did a 50% from the low. I did like a 3-year short.
Okay.
From 14 to whatever, and we're at the 50%. It's 1836, so it did more than the 50%. So where do we go now?
Well, the retracement numbers that I really pay attention to, Victor, are 382, 618, and 786.
So you think it's going to do 618? It's going to keep on going back down to 1706. That's the next number that was up there.
Well, I was talking about hammer candles just before we took your call, and on the monthly chart here, which is what I've got up for ticker symbol POM, it actually formed a hammer candle the month of April 30th, 2012. So the low that's really important for you right now happens to be the low of that trading week or trading month, which is $18.14. It's at 18.32. So if it breaks that level, as far as where it will head to and where it looks like it actually wants to head to anyways, it's probably the low of August 31st, 2011, right around $16.57. And then what you've also really got to be paying attention to is all the way back in 2009. That's that high volume low that was not tested. But the first area of support that you've got on this equity happens to be, you just got to, it's that hammer candle from April 30th, 2012.
I got another question. On silver, I don't want to change the subject. There's a lot of open gaps from like $6 and up. Will they ever get closed? Because on the point and figure chart, it says it's going to $2 a share SLV.
Will
those gaps ever get closed on silver?
Okay, so if you're looking at the SLV, the gaps are irrelevant. They don't have any meaning. And the reason that they don't, Victor, is because the SLV, the underlying instrument, is the actual silver contract. So the only gaps that have any meaning when taking a look at silver or gold are going to be the actual contracts, and not so much even the continuous contract. You need to take a look at.
Get that out of my head.
What's that?
No, I got to get that out of my head. Like all gaps will be filled and closed.
Well, what you want to do for sure is you want to make sure that you ETFs are great structures, certainly for being able to play a market. I would say if you're really seriously interested in playing a metals market, your better money management is to actually play the futures contract, because when you're playing something that's liquid, let's say like gold, for example, your stop is going to get taken out. Only on extreme rare occasions would that not take place. Whereas if you were to trade the GLD or the SLV, something takes place overnight. Japan opens, China opens, Europe opens, 3 in the morning, 4 in the morning. You start to get some big movements, and that's why your stops will get jumped.
Too, right?
What's that?
Closed this week. China's been closed the whole week, right?
Well, but when I say China, I really am just referring to Asia. I mean, you just have so many world markets. India, you have so many different markets that are going to impact the prices of metals, that what you really want to be able to do is like I say, if you really wanted to, the better money management trades are actually on the contract themselves. Now, that's if you use stops. Look, if you don't use stops, don't even think about doing
just
something
pick out
like
Intel
that.
if you get a chance. Intel.
Sure, we can take a look at Intel.
November. So
yeah,
get the dividend if you buy before November. Thanks.
Yeah, the thing on I would say you want to really be paying attention to the chart pattern itself, and if the chart pattern makes sense to take the trade, then the dividend becomes the next piece. But inside of Intel, and it sounded like Victor dropped out there. So, folks, remember when you are trading an ETF, please make sure, and like Victor was doing, which makes sense, is taking a look at gaps, but make sure that you understand the underlying instrument out there, because in the case of SLV, if you play that, don't pay attention to the gaps. They have absolutely no meaning. And if you do trade the SLV, which is fine, or the 300% of silver or gold, go get access at least to the data feed and get access to the chart for the actual futures contract, because from there you'll be able to make a better informed decision, because all that's really taking place is just where's supply and demand, what's going on pattern-wise with inside a stock chart. Now, on Intel, that's a whole different story. The gaps that would show up in Intel have meaning. They absolutely have meaning out there, because this is just going to trade, in essence, the underlying instrument is Intel. So if we take a look at Intel here on the daily chart right now, it shows nothing but bearishness to it on the daily chart. If we take a look at where price is moving back, and then why do I say that? Well, if we take a look at this price move down here, you don't see any bullish candles. Now, just because a candle shows up on my chart as green, that doesn't mean it's bullish. All that references is where price opened and where price closed during the trading session. If I get rid of these moving averages over on this as well, in fact, I get rid of the retracements out here. just because a candle is green doesn't mean that it's bullish. This candle right here, there wasn't enough of a downtrend. The candle I'm referring to is September 24th. So that's not a bullish engulfing candle, folks. If you were going to say, hey, that's a bullish engulfing and that ought to be a support level, that's not the case. This is not a hammer candle right here. This is a hanging man. This is September 18th. So you want to make sure that you're utilizing you want to make sure that you're reading the message of the markets correctly, because otherwise you would end up making some poor trading decisions. That's referred to as a hanging man, which many people think of as a bearish candle signal out there. I don't see it. In fact, it's not. It's the least bearish that you can possibly get out there. It's more bullish than it is bearish in the marketplace. So these candles, that candle has really no meaning, or in my opinion, should have no meaning. It should have no meaning with regard to how you're trading, at least. You can look at it as possibly being, I'd say don't even spend time with hanging man candles. They're just, anyways, it is my opinion, but it's also based on all the trading that I do out here. So in the case of Intel, all we can say at this stage is that it has made a retracement of 0.618, which is 22.73. It's trading at 22.73 right now. But no, and the candle today, now this would be considered a piercing candle. So today, because there's enough of a downtrend, if in fact you get Intel to close above 22.82, then you would have your first bullish candle with inside of Intel. And I would say that support should be the low of yesterday, which is $22.57 out there. And it is in a bit of a oversold condition out here. But we can see in the case of Intel, it broke through a hammer candle. It's an important hammer candle back here. This was on July the 10th. That certainly led to lower price out here. The retracement that we've seen here inside of Intel on the move back, let's take a look at what type of retracement that has been here. We'll go measure that. We're going to go ahead and measure that from the shooting star. Now, that is a reversal candle, and I had follow-through on that very next trading session on June the 5th out there. So if we go from the high all the way down to the low out here, that low is going to be August the 16th. On the way back up, it has only made about a 50% retracement, I suppose, on the way back up out here. But at this stage, volume-wise, what do we got out here? The interesting thing about Intel is if we go over and we actually take a look at the SOX index. So I'm going to just switch gears and go take a look at the SOX index, because as we were pointing out yesterday, with the market pushing down, look, here's the SOX, here's the semiconductor index. And even with Intel as weak, let's say, as we were taking a look at it, if you take a look at the SOX index, this is not bearish. This is the daily chart of the SOX index. Let's just switch over to the weekly chart out here. Because what's important about this, or what's amazing about this, I suppose, with as bearish sentiment as there has been inside the Dow out here, this is actually a breakout. This is potentially a breakout of a consolidation pattern that goes back to May of, I guess only May of this year. But still, nonetheless, it's a breakout, a high-level breakout up here over at Intel, which says that of the SOX index, which says it actually wants to get back to the July 2007 highs out there at about $545 out there. Kind of interesting, isn't it? 877-927-6648. Of course, we'll take our Q's, P's and Q's today from the 30-minute ES. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 26 right now. S&P is up 4. NASDAQ up 17. New York Stock Exchange, kind of a little bit of a laggard out here. Let's go out to San Jose, California. Good morning, John. Thanks for calling. Thanks for holding. How are you doing this morning?
Hi, Steve. I'm doing great. Thanks for taking my call.
My pleasure. You wanted to take a look at the GDX, the Gold Vectors Miners ETF. Tell me what you're doing, how I can help you out.
Yeah, I'm planning to, buy it. So want to know what is the right price to get in, and also in the next couple of weeks we have the debt limit discussions coming up. So yes. I'm wondering, what kind of an impact it might, do for the gold miners or gold stocks.
So the latter question more difficult to answer for you. The first question, as far as where to buy it, the answer is not now. So right now is not the spot to buy it from. You want to see some kind of reversal, and the way that you need to line up the GDX is you actually have to really be paying attention to a reversal in gold. So if you believe that for some reason we saw the lows in gold, then my outlook here in the GDX would is wrong, and you should buy it now. But I don't think that's the case. Right now, as we take a look at the GDX, you can see this. It made a nice pattern on the way up. If we take a look at the A to B equals C, it made a couple of nice patterns on the way up. But here's your 1 to 1.272 A to B equals CD as it made its high Key reversal, bearish engulfing session on August 27th. Always a significant change in trend indicator. You got to follow through that next day. Now, ideally, this would actually make an A to B equals CD down. And if we take a look at what that would be coming from that same swing point of August 27th down to the low that was put in on September 13th, and then all the way back up a couple of days later on September 18th. Now, why this one would be nice and ideal is because the B point on the GDX is September 13th, and that had 50 million shares. In fact, I'll do this on TigerTV. Let me get rid of the lines on the screen here. What you're going to be able to see here, John, is that the GDX so far has passed the B point on light volume. That's what we want to continue to see out here, is we want to be able to see the GDX maintain its move lower on light volume. Because what that sets up is that sets up a little Tiger Gertley-ish buy. But the reality is it's not so much a Gertley buy as it is buying the actual D point here, because this retracement is going to be so deep. It says that price in the GDX is going to come all the way back to the June 26th level, somewhere around $22.21. So ideally, John, what you want to look for is a test of that candle on June 26th, which is between $22.21 at the low, $22.89 at the high, and you want to see that done on less than 46 million shares. And then, as a must, what you want to do is you want to make sure that you see a reversal candle out there, because price can go lower. And the other thing is make sure that you line it up with regard to what's going on inside gold itself. Now, I'll pass along a piece of advice for you, is go look at all the different gold stocks, or go test drive Mastering Probability, or go test drive the gold report from Tom, because I know the way that I'm going to play it. I'm pretty sure I know the way that Tom's going to play it. There are strong gold stocks, and there are weak gold stocks. And we've had a nice move off the bottom, and instead of going ahead and playing the GDX, what you should be looking for is your own little basket of stocks to play that will likely outperform the GDX. That's how I would suggest that you do it.
Great. Thank you, Steve.
Hey, you bet so much. You bet. Have a nice weekend. Folks, if you're off to start your Friday, have a fantastic Friday, an incredible weekend. The Nadex Bull Bear Binary Option Show is up next. Our man Daryl, I guess he's out with surgery, so I'm going to stay on and have some fun with Tom O'Brien. Folks, if you're off to start your Friday, have a great weekend. I look forward to seeing you Monday. Otherwise, we'll see you in just a few minutes. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.